welcome back to my channel, and make sure you like, share and subscribe. So this is a little request going out to you, and in this video I am going to tell you about the covered call strategy, and I am also new to it. I tried this strategy for the first time, and I will show you what the results I have got, the profit and loss and the view. The things that I am going to cover in this video is that: first, about the strategy; second, about my positions and my view and the profit and loss, and how does this strategy work. So let us go straight to it. This video might be a little bit longer, like 20 minutes and all, so please do wait and watch the full video so that you don't miss the important points that I am going to focus. So the first thing is that, let us understand about this strategy. Okay, let's remove the positions. Let us go to Obstra option analytics. So then we have to go to strategy builder. Using this Obstra strategy builder, I am going to explain to you what is um, this covered call strategy. And actually, there is one secret, that is time in the market is important, not timing the market. So futures, and our expiry is going to be 29 September. Hmm, 29 September. So friends, please do verify again when you click before adding the positions. And the payoff date is going to be September 29th, because futures also have expiry, and on that day you have to roll over the futures. So add position is getting added. So one position we already had. This is like when you buy one future, then you will have maximum profit undefined, and maximum loss also is undefined. So let us add options to make this a covered call strategy. Options, same expiry, 17,500. So I'm giving you this example, that's why I have taken this. Sell, add position. Now you can see that the maximum profit is 16,000 and maximum loss is also undefined, and the break even is at 17,167. Now currently Nifty futures is that 17,570. So 17,167, this can be easily achievable. And in case Nifty expires below 17,500, and we are going to receive all this 20,000 premium. Now to make both this additions, or more this positions we just need a capital of 1,22,000, but you also need money to do adjustments or to pay in the span margin. And also that mark to mark means what, like for futures there is MTM, market to mark, that is means opening price and closing price, in between whatever profit and loss that happens in the future on daily basis, that will be credited to your account. In case it is debt, then you have to pay the margin or pay the loss. You have to maintain that. So that's why you have to keep extra 1 lakh. Better to keep. Let me put off the ink. Oh, so covered call strategy is like you have to buy one stock and you have to sell call option. You have to sell a call option, either at the money or out of the money. I hope you understand. So what we have done over here is, let me explain in brief. We have taken two positions, that is we bought futures. Why futures? Is because I have the capital, I have a lot of capital, that's why I have taken futures. And also I have said that time in the market is more important than timing the market. That's why I am giving you this example. We can expect that market will breach 52-week high that was achieved 6 months before. 17, that 52-week high is 18,604, and I firmly believe that in this year we will achieve this. This is just 5% from here, from this spot level. Also at this position 17,570, and have to sell a call option. This is a call option and this call option is sold. That's why negative sign is shown here and positive because we have bought. So this is how a covered call works. You have to buy one futures or a stock. There is a lot size here. The lot size is 50 because we are dealing with nifty, and you have to sell one call option at the money. So I hope that you understood. Now one thing that I wanted to tell you is that this is the calendar of August, and I had taken the positions on 17th, and I think till the expiry, this is the expiry, and you have to sell the future before the expiry, because on the expiry what happens is that a nifty index and nifty futures, so the future is going to expire on the index. Future is always trading 50 points higher, or this 50 rupees is the premium. So what happens on the day of expiry, this premium gets offset, means this 50 will be null, and both the rates will be same. So there are only 6 trading days because Saturday and Sunday is holiday. So 1 2 3 4 5, so only I had 5 days. Our strategy is buy and hold, because you have to, but the main intention is to buy and hold because we have to stay for long term, and we know that in the last 20 years nifty has grown by 17 times. Nifty has grown by 17 times So to take advantage of this, we have to buy and hold, and in case we make a loss, then we have to do rollover. Okay, so I hope you understood the logic behind this. Okay, let me explain you further. So let us go to Chrome, and you would be wondering why I had taken this trade, or what was my view. Let's go to 17th. Here we have 17th daily report. This is about Nifty. It is said that Nifty was trading about 50, 10 and 200-day SMA. That means our trend was bullish, and also RSI is moving upward, indicating positive bias. Not now. You can see here that that this was in uptrend. Nifty was in uptrend, so I have taken a trade for a upward view or for a bullish view. Well, I will show you my positions and what I have done. Let's so you can see over here that today I booked the Nifty futures. I put on the ink. Today I booked the Nifty futures. Why this ink is not working? Today I had booked the Nifty futures, and the profit that I made today was 3,500, and also I got little bit benefit of the theta decay or time decay. So let me show you my positions or the transactions that I had taken on 17, so that you may also find this genuine. It is always better to confirm that whatever you are learning is from the genuine source or not. Go. Here you can see that on 17th I had taken this trade. Nifty futures was 17,938 on 17th August, and also somewhere 17th I had sold one call option 17 at the strike price of 17,950. At the money I had sold on, and the price was 146. So I was supposed to get 7,310 in case the market closes below this 17,950 level. Now let me show you the gain and loss statement. Go to derivatives. Go. So you can see that previously I had done some trades before 17th, and from that I made 15.3k profits, and you can see here from the call option that I sold for 17,950 that I received the premium of 6,910. So this was like my monthly income, because that Nifty future is that you have to buy and hold. because nifty is for long term. Nifty is not top 50 companies of India. If nifty won't be there, in India also won't be there. So you just have to buy and hold for long term. And in case you make a loss, then you can roll over means what? You can sell and you can buy a new nifty contract the next month. Let me show you the charts and how I was saved because of the call option that I had sold. Let me show you the charts. So this is on 17th, and I had bought at 17,938. 938 will be somewhere here at this level. And so just 2 days after that, there was a great fall of 200 points for 2 consecutive days. You can see here from like my futures started making a loss from here because there was a sharp fall for at least 200 points I can say. And because of that, the call option that I had sold expired very soon, or I can say that the premium I received was very fast and the time decay was also fast because of the fall. So I received that my premium of 6,000 because of this. And I covered my nifty future here because you know that as I had said, nifty future and nifty index, so on the day of expiry this future is going to expire at the index rate, that 50 rupees whatever extra premium, this premium gets expired on that particular day. Very easy. Let's delete this portion. Delete. Okay. I can explain this again. So this was the price that I had bought, 17,000. I want to move this. Okay, this was the price that I had bought for. So, and this 17th was the day of transaction. So what you have to do is, this is the closing price, so equals to edit. On the tab it's becoming so difficult. Is equal to, just a minute, is equal to, open the brackets, closing price, this was 17th ka closing na. Okay, closing price minus minus buying price, and close the bracket, enter. So on 17th of the future I made 36 points. The same way I can show you about the other days also. Equals to, open the brackets, closing of 18th means today's closing minus previous day's closing. Because what happens now, there is mark to mark means what? Opening price minus closing price, and whatever the little profit that you make, or whatever points that you get, no, it is getting credited to your account or debited to your account according to the profit and loss that you make per day. So what happens on that closing price, the next day future starts. It's like that. So that's why I'm doing this. Now you can do is click and drag corner fill option and click and drag. This is what you get. And 17,688 was of 25th edit, because the future I sold today is equal to close the bracket, closing. This was the covered price today that I had covered now, so covered price minus previous closing, close, enter. So I made 70 points today, and I will show you how I have done. Let's move this, move, click and hold. Okay, is equal to sum click and drag, enter. And from the options I made this profit 6,000. So what you have to do is to find out the profit is equal to minus 250 multiply by 50, because one quantity contains 50. So from the futures I made a loss of 12,000. To find the net profit is equal to, we have to add, because is the profit that we have received. So what I was saying is that the future position that we buy is for the long term, and this that we receive, that 6k, is our monthly income. And this I tried it for just 6 days. So within 6 days I was able to make 6k. That is very great. So I have also taken positions for the next month. That bought this call already. So and tomorrow is Friday, so I am hoping that I might, when the market falls, I will buy at the dip. I really like this strategy, like buying at the dips, because I will be able to buy one future at the dip, because market is also very high. So in a day the market opened with a gap up, then over here, so I'm looking for a pattern, something like this. I will buy over here. So like in a day the market makes momentum, so I will buy somewhere around here at the dips. This is daily charts. Oh, so this is 15 minutes. I can show you that, like in a day it comes below the average price. Now here, over here I will buy at the dips, because I will make extra profit if I buy over here. And my friends, you have to buy and hold, and when you buy and hold, only then you will make profits. And monthly, and if there is time decay, then you will also make a benefit out of the call option that you have sold. Thank you friends, I hope that you understood the concept of call option, covered call strategy, and I will continue doing this covered call strategy, because I think markets will make a new high. It will break our previous 52 week high of 18,600, and I also hope that this happens. If this happens, then I will make a profit of somewhere 16k next month. So till then, bye bye, good to meet you. And in the description I will put the link of my Instagram account, then you can follow me. I upload daily calls and all, but I think there is a risk involved in that, because in cash market what happens, no, is that you can't do hedging. You can't limit your loss in cash market. So friends, the next video I want to do is on real estate versus nifty. Which